Okay, so good morning, everyone. Welcome to the macro snapshot. We are, what are we? January the 22nd, 2025. Let's just quickly, first of all, review overnight what happened, because Trump has always a few headlines, especially about tariffs, which is most pertinent for us. He basically, okay, so on day one of his administration, day one on Monday, there was no sort of tariffs introduced, which so the market basically had a little bit of a risk on kind of relief rally. We saw that the long end of the curve went up quite a lot, like the 30-year bond had quite a happy day. Equities sort of pretty happy. US dollar weakness. We saw that precious metals were supported. So generally sort of a risk on relief kind of tone. We saw things like the Australian dollar do quite well and the Canadian dollar make a little bit of a comeback. But last night he did make, again, these are not formal comments. So the thing is, when we're trading Trump or analyzing, we have to understand that he's very comfortable destabilizing markets, destabilizing negotiating partners. And when he says, "Oh, we might do something," the market tends to react. But you have to take everything with a grain of salt, and the fade is probably the correct thing to be looking at. Anyway, for what it's worth, Trump last night did reiterate the fact that he's very unhappy with the fentanyl drug supplies coming in, he regards, through Canada and Mexico. So he did reiterate the fact that he is thinking of imposing tariffs on Canada and Mexico, and also in China. He mentioned, he keeps on mentioning a date of the 1st of February, and he did mention late yesterday evening or last night, a 10% potential tariff on China on February the 1st. So will he do that? Is that just a negotiating tactic? We don't know. It's one of his ways of keeping markets and partners sort of unstable and off guard. But what we can see is that in China and industrial metals are sort of a little bit under, just still a little bit conservative and a little bit sort of under pressure and a little bit nervous. So maybe that's having some kind of effect. So if we also just have a quick look and see what's going on, we see the VIX remains at, pretty low levels at this point, 14.8 as we talk, 14.7. So again, for the volatility targeting funds, as the volatility goes up, they automatically reduce exposure. As volatility goes down, they automatically allocate more exposure. We also should have, which is a positive for equities in general. We should also have a look at the MOVE index, which is the kind of a general volatility gauge of the bond market. And what we can see here is that it's not at its lowest levels, sort of 80, 85, but not too bad. And this is also, in some level supportive to bonds. We also had yesterday afternoon a pretty big splashy announcement about AI investment. Apparently $500 billion of sort of SoftBank, Oracle, and OpenAI. So it's sort of a joint venture. So those particular companies doing pretty well this morning in the pre-market. But the thing is here, if we look at the S&P 500, or let's just look at NASDAQ here, you can see NASDAQ on the futures here up 91 basis points, outperforming the ES, which you can see here on the right, up 48 basis points, and compared to the Russell, which is actually a tiny bit sort of negative on since the session started. So NASDAQ pretty happy. And you've got to say that, this bull flag, NASDAQ breaking out of that. And I mean, I'll just throw in some EMAs here, some moving averages, all above, all the trends are upwards. This is looking positive. And to be honest, there's no particular data coming out of the US today, or any big announcements as far as I can see. We do have some earnings. We also had Netflix last night, very, very positive earnings on a bigger subscriber base, and also offering the fact that they're going to probably increase prices by a couple of bucks per month. So Netflix doing well. So a lot of positivity coming into the NQ, and I don't see any reason why that can't really test the highs at about 22,300. That looks like there's nothing really going to stop that. We might have a bit of a pause here at 22,116 on the futures, but basically that seems reasonable to me that it might want to retest the highs. Similar situation here in the ES. We see that all of the main moving averages here on the EMAs, the 20, the 50, 100, and 200, they're all breaking out of this bull flag, which we sort of mentioned, above the horizontal support. And you've got to say again, a retest of those local highs at 61.42 looks kind of reasonable. On the other hand, we do see, if we look at some of the other ones, we see that, Russell doing quite well, not so today, but doing quite well. And what I always like to look at as well, we look at the MAGs. This is the ETF with the big, sort of tech stocks, the MAG 7. We can see here that's sort of like, is that a bull flag there? It looks like some kind of bull flag-ish. It came down to 38%, sorry, 61% fib retracement. And that looks as though if it gets a bit of a kick upwards, that could also break out possibly as well. But what's interesting, if you look at the equal weight, the RSP ETF, that's actually had a pretty strong 3 or 4 days. So what we're seeing here is increasing breadth in the market. So it's not being led by the MAG 7. So at this point, for me, it's going to be pretty interesting just to see on the back of that news from Netflix and sort of the positivity surrounding OpenAI and Oracle and SoftBank and whatnot, whether maybe the equal weights take a little bit of a break and leadership goes back to the MAG 7s. We shall see today. Also interesting to me just to see that Europe continues to do very, very well. If you look here at the Euro Stoxx 50, which is the gauge of the top 50 blue chips over in Europe, breaking out to new highs. It's a bit late to buy this now at this point, but just interesting because there's been a lot of negativity around Europe saying that, Germany's collapsing and everything's horrible. But if we look at that and we look at the DAX, the German index, doing very, very well. Perhaps even, can we say, outperforming the US? We shall see. Just another information here, just looking at a couple of currencies. As I say, overall, yesterday we had a fairly sort of broad sell-off in the dollar. So if I just find the dollar index yesterday, we see now the dollar is down, if you look at these recent highs, down about 2%. This is now getting to quite interesting levels of support here at 107.9-ish on the dollar index. And so as you guys can see here, if we go back, I think, yeah, so a little bit of support here. So this is an interesting one. I mean, it could come down a little bit more, but there's definitely, we're getting into areas now where we're starting to have a little bit of support. And structurally, I don't know that one. I mean, okay, we can say that the dollar is overbought if you start looking at RSIs and stochastics and everything like that. But the reality is the US economy is still doing very, very well. It does still seem to be certainly outperforming, let's call it China, and to some degree Europe. And we also know that the monetary policy, the Fed is still probably, in a certain sense, one of the most hawkish global central banks. Certainly more hawkish or less dovish, shall we say, than the ECB and over in China, where the yields are down a lot lower. So it just seems to me that maybe the dollar here, I don't know. Could this be a buying opportunity? Possibly. Might just want to see it leak down a little bit more. And one way of looking at that is just to look at some of the differentials. I mean, I think we might just have to see the differentials go out. And if we actually look at some of these, yeah, so let's look at the differentials between, this is the US 2-year yield and the German 2-year yield. And you can see here that those differentials have closed. There was a difference in favor of the US yields of about 230 basis points. That's come down to about 206, 205 basis points. So that's been one reason why the US dollar, specifically against the euro, has softened a little bit. Is this again stabilizing? That's a bit of a support level on that. If we look at the differentials on the fives, similar kind of situation. It's come in quite a lot. Again, is this some kind of basing stabilization? And if we look at the tens, that's come in quite a lot as well. So the point is that definitely over the last couple of weeks, the differentials have come in between the US bonds and the German bunds, and that's been supporting the euro. So the question is that might stabilize now. Now, I'm not saying it's going to start ripping out because there's no immediate catalyst at this point, as I can see, for that to happen. But probably what we'll need to see for the US dollar to regain significant new strength will be for these differentials here to start moving out. Now, what could start moving those out? I would have to get the bond yields starting to go. What's going to get the bond yields going? We'd probably have to have more specific information on tariffs, which are considered inflationary, maybe some hot US data, but we don't have any economic data in the US for at least several days. And we don't particularly have anything else from Scott Bessent at the Treasury. And talking about the Treasury, let's just have a look a little bit because we see here the yields Not a huge amount. I mean, this is actually pretty stable at the moment. So we're in a situation of stability, but something which did move quite a lot. If we look at the US, the twos, tens, we can see we've had quite a lot of bull flattening here. So the long end outperforming the front end, and especially if we look at, let's say, something like twos thirties, we also see that's been flattening. But if we look at the so if we look at that and maybe look at the twos fives, sorry, the fives thirties, a bit of flattening as well. So why is that flattening? I think the market, has digested, especially the first day of Trump, and basically it was relieved there weren't any of these sort of so-called inflationary tariffs put on. So less inflationary pressures symbolically. So therefore, less pressure on the long end yields. So they've come down a little bit. Less need for term premium as well. The other thing as well is that uh, we've seen this comment from Trump about oil, baby, drill. And what we've noticed, if you actually look at oil, the oil prices come down quite a bit. We're looking at WTI here, and you can see that basically in the last 3 or 4 days, oil has retraced significantly, about $4 or $5, 500 ticks. And remember that oil price is one of the major inputs into inflation. So another thing which I think is causing some of that bull flattening is lower sort of WTI prices. Oil prices here is less deflationary, is deflationary at the margin. So that's probably helping out the long end of the curve as well. The other thing as well is that in terms of supply, we do have pretty heavy auctions coming up early next week of twos and fives. So the 2 year and the 5 year at the front of the curve. So there's probably a little bit of a concession here. We're seeing that in terms of price. The front end of the curve is underperforming. So again, that's going to cause sort of a bit of a flattening. So I think all of that, those factors have maybe cause some of the flattening situation. Now, we'll see if it ramps up. Again, all we need is any kind of inflation data, strong economic data, more specific and concrete action from Trump on tariffs. If we get a 10% tariff on China on the 1st of February, the long end bond market will not like that. And again, we haven't heard a lot from Scott Bessent, the new Treasury Secretary. If there's any hint from him that, at the next quarterly refunding announcement coming up at the end of this month, that he's going to term out the issuance, so start to issue a lot more longer term bonds, that could cause the long term bond price to come down, pushing up the long end. That's going to start causing some steepening, some bear steepening. Again, that's going to probably put upward pressure on the US dollar, et cetera, et cetera. So just at the moment, though, I think we're just in a little period of calm for 24 or 48 hours. And that's causing everything just to sort of unwind some of the Trump trades. Just in terms of oil here, we saw the head of Saudi Aramco yesterday say that demand out of China was still growing and actually pretty robust. So he was trying to talk up China demand. To me, this is a very interesting point here because, as you say, as you guys can see here, if we look at this impulse here, we're now at a 38% fib retracement. So that's quite healthy. Oil's gone quite a long way. Again, it is complex, and I think it's two-sided. If we start talking about drill, baby, drill, do American CEOs actually want to drill more oil and pull down the price of oil? So remember, they're in direct contract with conflict with Trump here. Trump wants lower gas prices to be deflationary, but I'm not sure that the oil majors in the US actually want that. So this is going to be quite a little interesting level here. I'm kind of curious today to see if the market buys this, because it is kind of a nice buying opportunity. On the other hand, you have to say, globally, how is growth? It's okay, but you still have a certain amount of weakness in China and possibly even a little bit of weakness in Europe. So that's interesting here just to see what's happened. It could also just fiddle around and not too much. Again, just looking at some of the currencies going back there, we saw, as I just mentioned, that we had broad weakness in the dollar index. Again, I do believe this is going to stabilize around about this point. We see here that the euro has been the beneficiary, but again, that is coming up to resistance here. We're looking here on the futures at about 104.8. There is a little bit of resistance here. It's also the 50-day EMA. So I do believe we're going to get a bit of a stabilization here, and we might be in a sort of a wait and see mode. We had Christine Lagarde overnight at the Davos World Economic Forum in Switzerland talking, and she didn't really say too much about the Trump tariffs, kind of sort of brush it off, and sort of it's like a bit of a wait and see mode. At this point, the markets are pricing in a cut from the ECB at their next meeting. What was interesting overnight as well, just look at the Swiss franc here. This is the futures. We see the Swiss franc has had a little bit of strength, but we got some comments again at Davos from Schlegel, who's the new head of the Swiss National Bank, and he made a few interesting comments. He basically said that he was okay if necessary, if pushed to have negative interest rates. He said that wasn't his preferred sort of scenario, but he could live with negative interest rates. He also said that inflation was very much contained now within the target ranges set by the Swiss National Bank. And he also said that, if pushed, the Swiss National Bank was comfortable, if necessary, to intervene in the currency markets. Now, all of those things are basically dovish because they don't want the Swiss franc to strengthen too much because that's bad for tourism. It's bad for their export markets, and ultimately, it's a little bit sort of deflationary. So the point is here is that he's basically saying that they he didn't say that they would do a hard cap on the strength of the Swiss franc, but they certainly are happy with it being, a little weak. And they also understand that in moments of geopolitical stress and tension, and you could argue that's what we have at the moment, the Swiss franc obviously tends to appreciate as a safe haven. So it's just going to be interesting to see here how much more upside there is for the Swiss franc. I think any kind of resistance, this looks like a good level here, about 112.30. The 50-day EMA, which also has, some interesting horizontal resistance levels, that could be an interesting level there to think about shorting that again. Of course, we'll have to see what happens with the US dollar. Just finally, guys, just want to end on metals. We saw that, broadly speaking, with the softer US dollar, the commodities have done pretty well. Gold, this looks to me like it's a very bullish chart here. All of the EMAs are turning upwards. It's broken out of this sort of sideways consolidation triangle, which we see here with these gray lines. It's broken out above this downtrend, and you've got to say that's quite possibly going to test the recent highs on the futures here at $2,800. And also, with a bit of geopolitical risk, potential inflationary risk with the Trump tariffs, I think there's a little bit of maybe central bank buying, retail buying, and asset allocation just to say, hey, I was reading something the other day saying that global asset allocators in general only have about 1.5% allocated to gold. So all it takes to move, what ultimately is a relatively small market, gold up, is just maybe even 50 basis points of reallocation into gold. So gold looking pretty good. I think definitely if there's any kind of, significant pullback maybe to the $2,700 level, that could be a buy. We're seeing silver not quite as supported. This is interesting. Silver has more industrial applications, not quite as supported. And if we also look at copper, actually having a bit of a down day. And I think they're not benefiting from the softer US dollars just because, especially with copper, there's still a lot of uncertainty about Trump's potential imposition of tariffs on China. And I think until and unless we get clarification and clarity about the situation with US tariffs on China, anything to do with the Chinese market, especially like industrial metals, is going to be a little bit soft. And we saw that. I've got the Bloomberg Industrial Metals Index here, which is not updated that often. So it's a bit weird. It's the white line here. So this is the 60-minute chart. And you can see that just, essentially over the last, when's that, kind of sort of few days has basically started to go down. This is a general index of industrial metals. So not only copper, but also aluminium and zinc and these kind of things is actually sort of under a little bit of pressure. And as I say, I think we will definitely will have to get some more clarity on the US about tariffs to see if that has any chance of ripping higher. Okay, guys, I'll leave it there. Oh, there just was just the earnings. I just saw, I think we had Johnson & Johnson. I just had a quick look. That seemed to be quite good, just having a quick look at it. We have P&G, big consumer staples today. What for me personally is going to be quite interesting is to look at Halliburton. That's coming out this morning, which is the oil services company. They do a lot of oil rigs and everything. For me, that's going to be interesting just to see if they have any forward guidance in terms of the drill baby drill scenario, whether they regard that as a positive, which it could be. I mean, my personal view is that potentially if oil companies do decide to drill more, I think the oil service companies, and we have the ETF OIH, which could do quite well out of that. We also have reporting this afternoon, Kinder Morgan, which is more specialized in oil pipelines. So I'm just going to have a little sort of look at both of those just to see how they're sort of feeling about this new political environment. And we can maybe just have a quick look and just see on the headlines if there's anything coming through just before I let you guys go and sign off here. Let's have a look. Um, P&G organic revenue plus 3%, estimated plus 2.3. So it looks like P&G is doing okay. Johnson and Johnson adjusted EPS earnings per share 204, estimate 199. So I haven't had a good look at those, but they look on first blush as though they're quite strong. Okay, guys, have a great day, and we shall be talking soon again. Thank you.